A big increase in bad debts and the ongoing impact of this year's floods have dragged Bank of Queensland's full-year profit down 13%. Despite that, the bank's acting chief executive, Ram Kangatharan, says he's extremely pleased with the results. Andrew Robertson reports.
It's been a tougher than usual year for Australian banks, with Mother Nature making life even harder for the Bank of Queensland. But amid the gloom, Acting Chief Executive Ram Kangatharan is keeping a brave face.
The underlying results for the BOQ group was extremely strong, growing at 18%. And if it wasn't for those surprises on bad debts, it would have been even stronger at 25% growth.
Those surprises on bad debts led to a near doubling in provisions to around $200 million, most of which happened in the first half. That meant net profit in 2011 was well down on last year, even though revenue was up 12%. Constellation Capital banking analyst Peter Van, though, is one who thinks Ram Kangatharan's optimism is justified.
They're getting above system loan and deposit growth. Their bad and doubtful debt charge has come down quite significantly from the first half, which was unfortunately hindered by the flood provisions and some single losses on the business loans. The cost growth is really under control. It's a good outcome from their project pathways.
Ratings agency Standard & Poor's had threatened Bank of Queensland with a credit downgrade if it didn't get on top of its bad debts. Although there are still some issues there, Ram Kangatharan is confident S&P's concerns have been met.
And in the last 2 to 3 months, there's been significant improvement as some of the initiatives that we undertook to bring those arrears back into line had their effect on delinquencies.
A key part of Bank of Queensland's strategy is its owner-managed branch structure, where cross-selling of products is driving revenue growth.
When a corporate branch becomes under an owner-managed control, their footings, that is their deposits and loans, just seem to jump up quite dramatically after that event occurs, and they appear to get a much better profitability coming out of those branches.
Like other banks in the current climate, BOQ is now getting around 60% of its funding from customer deposits. However, it will eventually have to go back to the financial markets for money at a much higher cost, and that's where Constellation Capital's Peter Van sees Bank of Queensland's small size being a disadvantage.
I think they'll have some difficulty flowing that through to the customer base because they've got to be competitive with the major banks who have lower wholesale funding costs. So it will be a bit of a squeeze.
BOQ shares had a volatile day, eventually finishing up 1% in line with the market. The bank lifted its final dividend by 4% to 54 cents a share.